If that happens, in other words, if they achieve nameplate capacity in the first quarter 2024, which I expect they will, the stock will, I think, at a minimum double, even with no increase in the gold price. If they don't, I'll have egg on my face.
In this video, Rick Rule is set to discuss the current outlook for Equinox Gold. Rick Rule will share his optimism about the project's potential to be completed on time and within budget, a significant milestone in Canadian mining history. He'll explain how, if Equinox Gold achieves this goal in the first quarter of 2024, it could result in a substantial increase in the stock's value, even without a rise in the price of gold. However, he'll also acknowledge the inherent risks involved in such predictions. So keep watching the video till the end.
That when you reach the incentive price, you don't, in the near term, incent production, because it takes the stuff a long time to come to market, which means that the uranium price frequently exceeds the incentive price and exceeds that incentive price by a fairly wide margin. When people then look at the development companies in uranium, they don't do net present value calculations based on $50 anymore. They do that net present value calculation based on $75 or $80. Which has an absolutely dramatic impact on prospective net present values and hence share prices. If you will allow me, this won't happen again, but I want to define the order of magnitude. When I got involved in the uranium market in 1998, there were 5 juniors in the uranium space, 5 people that had survived a 20-year bear market. The worst performing of those stocks over the next 8 years, the worst performing of the 5 was up 22 to 1. The best, Paladin, was up, if my memory serves me well, 10,000 to 1. I'm trying to do the math from 1 penny to $10 in 8 years. I don't know what percentage the gain that is actually. I can't calculate it that quickly. I'm not suggesting that this time through, those gains are going to be as dramatic. Remember then that the uranium price increased from $8 a pound to $140 a pound. What I'm merely suggesting is 2 things: the exponential increase in share price that you can get from an increase in the commodity price when you can't bring new production online quickly, and the advantage you have when generalist money comes into a sector like uranium, or, by the way, junior silver stocks, where the market capitalization of the sector isn't sufficient to hold the capital that comes into the sector. That's precisely the circumstance that I think will happen sooner rather than later in uranium. The uranium price isn't ahead of itself. I'm not saying that the uranium price can't pull back. My understanding from extensive discussions with industry experts is that the incentive price for existing production on a global basis is about $60 a pound. At $60 a pound, Kazatomprom and Cameco can, as an example, sign enough long-term contracts that they can put their mothballed mines back into production and ensure a more than adequate return for shareholders. But if you have a development deposit, which is to say a deposit that you're not putting back into production, but really establishing, you require $75 a pound, not just to cover cash costs, but also to cover your cost of capital and, importantly, your social rents. So you have a situation where the spot price has to go from 65 to 75, and there has to be enough volume, not in the spot market, but rather in the term market, that producers can establish a forward sales profile that allows them to raise the debt required to put these mines in production. After they do that, it takes them 5, 6, 10 years to permit them, finance them, and build them. So the $75 price in and of itself doesn't increase production in the near term. It only increases certainty of supply a decade out. Most investors follow the dictum, got a hunch, bet a bunch. They don't understand the risks, and they don't understand the relative merits of the companies, particularly the microcap companies that they invest in. Some investors, as a consequence of the fact that they understand that they don't know enough themselves, don't invest at all. In other words, they miss the alpha and they miss the beta. I think it's a mistake for natural resource investors who can take some risk to miss uranium. But for the vast majority of investors, the vast, vast majority of investors, capturing the beta is all they need to do. Capturing the beta can be as simple as buying URNM and Sprott physical uranium. For probably 80% of the investors and speculators who I have come across in the space, doing that, capturing the market beta, and then going on with their lives, enjoying their lives, working their jobs, investing in areas that they know better, is a better thing to do. For those people who are deeply involved and deeply interested, for those people who are willing to spend an hour a month on every position in their portfolio, those people could and should take more risk to generate alpha, but only those people. I would suggest that of the 80,000 portfolios I've graded, those are 80,000 people that are more interested than most of the world in natural resources. And out of that self-selected bunch, I suspect that at least 75% should confine their activities to to beta around natural resources rather than alpha, because they are either unable or unwilling to do the work to assess the risk to chase alpha. Abra Silver, I haven't updated my ratings on. I want to see the results of the drilling on the high-grade zone. I am certainly impressed with the company's ability to answer questions from the format of the Rule Classroom. In other words, the answers that they gave were not obfuscatory. They understood very well the concept of answering unanswered questions. They understood the concept of the fact that the investment thesis should be founded on ground truths, not merely what is convenient for them. And I think the proposal to test the thesis was well thought out. I continue to be a bit concerned with the overall grade. I'm less concerned now with the infrastructure, given the fact that they help me understand the other mining activities going on in the Salta Altiplano, the fact that natural gas is going in there, that power is going in there, that roads exist, that the whole infrastructure of that Altiplano was driven first, of course, by the Lindero gold mine, but now by the exploding lithium industry up there. So I'm much less concerned than I used to be about building a mine at 4,000 meters in the middle of nowhere, because it's no longer in the middle of nowhere. And I'm also coming to understand, as a consequence of the now operational success of Lindero after a very troubled start, about the fact that precious metals extraction via heap leaching can take place at that altitude in that terrain. Mexico, you have a trade-off between wonderful geology and spectacular human resources. There's a deep mining culture in Mexico, and Mexican underground miners are some of the best in the world. If you look, as an example, at underground mines in the United States, the predominant complexion is brown. Mm-hmm. So you have that wonderful mining tradition, wonderful, hardworking, knowledgeable people, wonderful geology, and abysmal politics. And the politics and the sociology are getting worse. AMLO, the nickname for the president of Mexico, mercifully, he's leaving, but he will be replaced by someone likely of his ilk. AMLO is a nationalist, socialist. The idea that somebody other than the Mexican government and their apparatchiks should make money, I think has been an anathema to him. I think the same genius that wrecked the Mexican oil industry is at work on the fringes of the Mexican mining industry. I don't think they'll be successful, by the way. I think the miners will persevere. But I note that AMLO signals his intention to the mining industry by putting the former environment minister in charge of mining. So what you have to do when you invest in Mexico is invest in a company where the geology is so superb and where the operators are so superb that they can overcome provincial and federal politics. It's true, too, in West Mexico, in particular, in the Mexican Cordilleran, and to some extent in central Mexico in the silver belt, that the sociology is deteriorating, which is to say that in some aspects, Mexico is becoming literally a narco state. Sidebar, that can be good or bad. Informally, you can deal with a government that provides benefit for the taxes that you pay. And there are some mining companies, I'll probably not name them, who've done a relatively good job negotiating local arrangements with local power structures. And the local power structures in West and Central Mexico are almost always narcotraficantes. But from an outside investor's point of view, understanding that dynamic is very difficult. I can't just go down to Sinaloa and arrange an interview with a local boss to figure out how he or she perceives mining on a local basis in the Sierra Madre. Silvercrest I have as a 5. I was very disappointed in the reserve and resource report. I'm pleased with the on-time, on-budget completion of their capital project. I'm crossing myself. I have Equinox as a 4, looking to an upgrade as a 3. Equinox is way oversold as a consequence of the market's concern over their Ontario mine build, a $1.25 billion mine build. I am repeatedly assured that this is on time, on budget, which will be the first time in Canadian history that a low-grade Canadian Shield mine has been placed on time, on budget. If that happens, in other words, if they achieve nameplate capacity in the first quarter 2024, which I expect they will, the stock will, I think, at a minimum double, even with no increase in the gold price. If they don't, I'll have egg on my face. Power Metals is not for the faint of heart. This is a very small company, and you're invested in process. I have Power Metals as a 5, although I think I'm the largest shareholder of the company. It's an appropriate risk for me, for somebody who does a lot of work and can understand the process of merchant banking, which is the business that they're in. Endeavor Silver I don't own. I have it as a 6. I think they've done a good job operationally, and they've done a good job acquiring deposits and putting them into production. I note that it really is a collection of tier 2 deposits, and I'm not in favor of 2-tier deposits, and they are, of course, very exposed to Mexican social and political risk.
Rick Rule's insights in this video provide a unique perspective on Equinox Gold and its growth potential. As we've heard, he sees promise in the company's ability to overcome market concerns and deliver on its ambitious Ontario mine project. If Equinox Gold manages to achieve its objectives by early 2024, as Rick expects, it could lead to significant gains for investors. Nonetheless, it's essential to keep in mind the inherent uncertainties in the world of investing. Thank you for tuning in, and we hope you found this analysis valuable. Subscribe to our channel to stay informed, stay curious, and make smart investment decisions.